Welcome to RAIN, the Real Estate Investor Growth Network with your hostess, Jen Josie. Join like-minded real estate investors and accelerate your business towards greatness. You will hear step-by-step strategies for success, interviews with real estate rock stars, and we will dig deep into past projects where we bear it all, including the good, the bad, and some just plain ugly. So get excited. Here's the bestower of badassery herself, the real Jen Josie. Listener discretion is advised.
Hi, and welcome back. I'm Jen Josie, creator of RAIN, the Real Estate Investor Growth Network. Whoop, whoop. On today's episode, we have a guest that will be sharing their badassery. But before we begin, here's today's badassery bestowment, my little badass gift to you. Today's topic is watch for red flags when working with wholesalers. Rain Nation, wholesalers can be some of your best deal sources or the fastest way to waste your time and your money. Knowing the difference is a skill. So here are 5 red flags that should make you slow down and pay attention. Number 1, they can't provide an actual contract. If a wholesaler can't show you a signed purchase agreement between them and the seller, walk away. You need to see what they actually control before you ever hand over an earnest money deposit. No contract, no conversation. Number 2, the numbers don't hold up. A legit wholesaler runs the numbers. If their ARV is inflated, their repair estimates are a fantasy, or the spread leaves you no room to profit, that's not a deal, that's a donation. Always run your numbers independently. Always. Number 3, they pressure you to decide fast. Urgency is a sales tactic. Real deals can withstand a 24-hour analysis. If someone is pushing you to commit before you've had the time to think, that pressure exists for a reason, and that reason is not in your favor. Number 4, they ghost you when you ask questions. A wholesaler with nothing to hide will answer your questions. If they dodge, deflect, or suddenly get hard to reach when you start doing due diligence, that tells you everything you need to know. And number 5, they have no track record or references. New wholesalers exist, and don't get me wrong, some are great, but you should still be able to verify something. A website, a closed deal, a reference from another investor. If there's zero proof of life, proceed with extreme caution. So Rain Nation, remember, not every deal is a deal. Protect your capital, do your homework, and keep bringing that badassery. Now on to today's episode of the Real Estate Investor Growth Network podcast. Today's guest is Efri Argaman, founder and CEO of OwnEZ, Inc., a data-driven fintech company focused on expanding access to homeownership through innovative alternative data lending solutions. With extensive executive leadership experience across domestic and international companies, Efri has built his career around bridging the gap between traditional financial systems and the needs of today's economy. Under his leadership, OwnEZ has developed an underwriting engine that looks beyond traditional credit scores to identify what he calls invisible prime borrowers. By leveraging alternative data such as rental history and cash flow patterns, Efri and his team help credit invisible families, entrepreneurs, and ITIN holders achieve home ownership while providing private investors with predictable asset-backed returns. A residential real estate investor since 2009, Efri has experience across nearly every aspect of the industry, from rentals to flips to financing and new construction. Based in Austin, Texas, he is a recognized voice at the intersection of real estate and fintech. It's my pleasure to have him on the show, so welcome, Efri Argaman. Welcome. Did you hear that thunderous applause for you?
Thank you. Thank you for inviting me.
Absolutely. I am looking forward to this because there is such a huge need for you right now. Me being one of them, by the way, which we'll talk about once we hang up. But
Sure.
first of all, we talked about fintech in your bio here. I don't even know what that is. So, can we start there? What is fintech? And then what drove you to that industry?
Sure. So fintech is the short form of financial technology, simple as that. And basically, everything arises from a need that I had. So I was running companies in total different industry. And in 2009, just a year after the crisis, I found myself all of a sudden with a little bit of money. And I started to buy rental properties in several markets across the United States, mainly in markets that suffered during the crisis. The deals were awesome, but I wanted just to be an investor to run an Excel spreadsheet, get my returns, and forget all about it. And at a certain point, I realized that the operational burden of being a landlord for many tenants becomes a real big burden because statistically, every other day I would get a call from a property manager with a problem that I had to resolve. So I thought to myself, from an investor perspective, that there should be some kind of another solution to that. The other aspect that drove me to this industry was that when eventually, and it took me like 8 years after 2009, I started this company, I knew from day one that I would like to scale it up. And I knew that I don't want to run a company with many employees, lots of team members, and so on. And I want to be in a position that I can automate processes, do proper analysis. It was before the era of AI. So obviously, it was a different era. So, with the mind of building the company moving forward for scale, we decided to develop everything based on a technology landscape that will allow us eventually to grow. And obviously, at the later stage, we had AI involved in it as well when it broke through.
Nice. So, you've experienced from 2009, you did flips, you did buy and holds, new construction. Out of those, what was your favorite? And do you still have some of those rentals?
No. So I hate operations. I think that across our conversation you will hear that I hate operations. I am an entrepreneur in my soul, and I'm getting bored when it becomes an operational process. So, and luckily I have great team members with me in the company that are taking big chunk of the burden of the operational burden of the day-to-day task management. So I made all of it. Eventually, I ended up dealing with financing because financing mainly is based on good analysis, and the operational burden of managing financing is much less than anything else. I think I suffered the most with new builds, didn't like it at all. I did many flips. With some of these, I made money, with some of these, I lost money. This is the nature of the beast. Sometimes you strip a house that was built 100 years ago, and once you tear the walls, you realize that whatever you had in mind is not really the reality. I heard your advice in the intro, and I could sympathize with it totally. I think that some of the or best deals that I've done in my lifetime were the deals that I didn't do. And realistically, because with the numbers, we have the tendency to try and tweak the numbers so to satisfy ourselves. You see a
Yes.
deal, it looks nice on paper. Maybe you got a nice PDF or a website with the greatest picture and drone pictures, and people tell you that it's close to downtown somewhere, and it's a prime location, up and coming, the second circle, blah blah blah, all of it. And then if you are brave enough, you go into the place itself to find out that it's a poverty area that is not going to change anytime soon. So with financing, at least, I think that we managed here to create an alternative algorithm that takes into consideration data points that are relevant to our target audience. And I will elaborate about this and come with a solution that, first of all, is disruptive. And secondly, once it works, it works. So we don't
Well,
have to deal with the operational burden that I
gotcha.
hate
Well,
so much.
I ask because I feel like some of the best lenders out there are the ones who have been in our shoes of people who are doing the rentals and all that stuff. So you having that background just makes you so much easier to work with. So I was just giving you props right there for having experienced it, especially in a time where you're able to buy very well back then. So yeah,
Sure.
you definitely went through it. So I want to get into OwnEZ model. So how does it actually work for borrowers, and how does it work for investors kind of like on the other side?
Sure. So again, going in a couple of words about the history of this. So I found myself with tons of rentals, wanted to make a change, and at the same time, I realized that some of my renters were what we call chronic renters. These were people that were had the ability to afford buying a home, and I knew that because they were paying me rent. Some of the properties that I bought them with the tenants in there. So when I bought the property, the lease was transferred to me. So there were people that were living in the same property for 10, 12 years, and sometimes paid more than the value of the house in rent. And when I started to explore it, I realized that there's a large group of people, large, I mean tens of millions of people across the nation that can afford buying a home, but they're not fitting into the structure of the traditional industry. So they're not fitting into the scheme of the Fannie Mae, Freddie Mac supported loans. Either they're working in the gig economy. The gig economy outbreak to our life, and people today can make money out of working on a platform like Fiverr or Upwork or one of these platforms, or driving an Uber, or working for DoorDash and make a lot of money, but they don't have a W-2, and
Right.
the stream of their income is not consistent month to month. They make a lot of money on a yearly basis, or you may be making money out of your rentals. And if you are smart enough, your taxable income will be close to zero. We will not talk about that. I don't want to have issues with Uncle Sam, but legally, of course. But from an underwriting perspective, when you submit your 1040, you don't you or your financials, you don't have proper W-2, and your taxable income is negligible. So you will not be able to get a loan even if you get tons of cash flow. So, and there were these people that got the ITIN. ITIN stands for Individual Tax Identification Number. This is a number that is being issued for legal non-immigrant laborers that come to the United States and work here legally and they pay taxes legally. Um, and they're allowed to live here, but they have no access to conventional loans. So when we looked into all of this, we said, okay, there must be another way to predict whether a prospective borrower will make their payments. And once we have done that, we have built non-discriminatory algorithm that takes into
Hmm.
consideration data points like how much rent did they pay? How did they make their rent payments? My assumption is that if somebody paid, let's say, $2,000 for the monthly rent, they will be able to make $2,400 towards their mortgage for their own home. Were they evicted recently or not? Or if they, let's say, paid only $600 for the plot to put their trailer for the last couple of years, what did they do with the rest of the money? Did they save it towards a down payment? Big yay. Or they consumed it? Big nay. And what are the reasons that they have certain score? Because I don't care about the score. The score is just a number that doesn't reflect anything. Because if I pay my revolving credit and I keep my utilization low, then I manipulate my FICO score easily. But
Right.
I do care what is the reason for being declined for a conventional loan. Is it because I never had a home before? Or is it because I'm a villain that doesn't pay my debt? So when you combine into this in a schematic manner, we are able to provide a solution for people that can afford buying a home. It's a full doc loan, but they have no access to conventional lending because the way the system is structured. And when we talk about the potential, nobody knows the real number, but the calculations are that there are about 37 to 42 million people in the nation,
Wow.
which it's like more than 10% of the total population. So we baked everything into a system. We are providing loans only to owner occupiers. So they are actually obliged to keep their homes. This is their own home legacy. and we convert what we call chronic renters to become homeowners. So this is
You convert what?
we convert what we call chronic renters,
Gotcha. Chronic renters.
yeah, to become homeowners. So on the investor side, to your question, so being an
Well, hold on.
investor,
Before we get to the
yeah,
investor side of it,
sure,
what
okay.
is the invisible prime borrower? Is that who that is, or is that someone different?
Yeah, so the invisible prime borrower. So this is very interesting. A couple of years ago, or a year and a half ago, we did some work with some of the credit bureaus to figure out whether there's a benefit for us to look into the data that the traditional credit bureaus are providing. And we were checking what is the hit rate, what information do they have, and what score. We took a database of loans that we already had in the system, and we checked what would be the score if we were actually pulling a score for these borrowers. And we were surprised to find out that some of them were in the prime and super prime score area. And what we call the invisible prime, these are people that, as I mentioned, they have the ability to afford a home, but they don't fit into the system. So you might, again, working the gig economy, uh, have decent income, be an influence, you might be an influencer. This is a
Like a
new
doer of badassery, maybe?
a badassery, yeah, a badassery. So you might be a badassery, but guess what? Fannie Mae and Freddie Mac, they don't have it in their book. So when you
Right.
go to a traditional bank and you ask for a loan, you won't fit in even if you make a lot of money from being a badassery. So so this is a real problem, and we are coming with a solution for such people. So yeah, it's not the 2007 loans that you had to breathe and have pulse in order to get money. This is full dog to show us how you make money. We want to see the cash coming to your bank accounts. We want to make sure that you're legit. We make sure that your income is legit. So everything is being checked. We want to make sure that you are financially responsible for your expenses. However, if the source of income is not a traditional source of income, and you don't have a W-2 for the last 2 years, and you get your income on a 1099, or you don't have a social, you have an ITIN, that's fine. That should not prevent you from being able to buy a home.
All right. So another question before we get into the other side of it.
Sure.
One industry that I am personally looking to get involved in right now are manufactured homes. And a lot of lenders don't like to lend on manufactured homes, or even just maybe just on the investor side. But is there a type of property that you won't lend on? Or I'm just curious.
As long as it is attached to the ground, we're
Okay.
good with it. So, and again, this is all about perception. So some of the manufactured homes today are nicer and better, are more robust than a house that is being built with a frame. Okay. So,
I
from our
agree.
perspective, we want to make sure that nobody takes the asset and goes away.
Okay.
And since legally we cannot put, there is a way to put a lien on a mobile home when with the mortgage, and we do mortgages, you have to put the lien on the land itself. So if it's connected to the ground and it has a skirt, then by all means we will finance it. If it is on wheels and somebody one morning can take the home and vanish, that's a problem.
Gotcha. Thank you for taking the time to answer all that. Now let's go to the flip side of OwnEZ and how you work with investors, because I'm sure you pool investors' funds. But you
Sure.
mentioned, and I want you to get into this, but you mentioned that you've never had an investor loss. So, like in this market, which is so unpredictable, how does that work out?
Okay. So first of all, quick and mandatory disclaimer: anything that happened in the history may not reflect on the future. Once we have done that and we have put this aside, so we are focusing on lending only to prospective home buyers that are going to occupy their homes. These are
Okay.
not financial transactions. These are people that they want to leave legacy, to inherit something to their kids. They want to live in their own homes. And our funds are not leveraged, meaning that There is obviously a possibility that if an Armageddon scenario happens and everybody runs away and nobody pays the loan and we have to sell all the properties that we foreclose at once, there might be a loss. In reality, since we have a distribution over several geographies, many loans, the impact of default is very low. Secondly, our borrowers have very low appetite to default. They will default only if they have no other choice. They had big turn in their life story and they just cannot pay anymore. However, most of them, since this is their homes and they have to live somewhere, the majority of our borrowers are anywhere between 35 to 44, young families or young to mid-age families, usually two, three kids, and they have to live somewhere. So if they're not in the situation that they have to go and live in their car, they will have the motivation to continue to make their payments because the alternative of abandoning the equity, stop making their payments, and go and look for a rental property to live at is very low. So in reality, our cumulative default rate over the years was extremely low. In most
Good.
cases, we didn't have to go to court to resolve it. We resolved it amicably with the borrower once we analyzed their current situation and we came into the conclusion that they cannot make their payments. And we managed to materialize the property and reinvest the money. So until now, we didn't have any investor losses.
Good. I like the disclaimer, by the way. That was very So how does it work for investors? Do you have to be accredited? Is there a
Sure.
minimum and they just park their money for you? And also what's the return? What's the benefit for them? What type of returns are they getting?
Of course. So my initial motivation, I'll be very honest, aside of the fact we are not trying to hide that we are leaning a little bit towards capitalism, but at the same time, we're trying to be capitalists and do some good as well.
Yes.
But my initial motivation was that I hope to run an Excel spreadsheet and get returns. And eventually I got stuck with getting phones from property managers. And one day when I will retire, hopefully soon, I will write a book about my stories with my rentals, especially in Las Vegas. This is the craziest place on earth to own rentals. Anything from sharks in the living room to a boiling egg on the stove that turned into a fire. But realistically, from an investor perspective, I was looking, and this is the reason why I went into rentals initially. I was looking for something that is stable, not volatile, and the most important, not correlated with what happens in the markets. Because I'm old enough to remember the crisis of 2000, 2003, 2008, and so on. And while part of my portfolio is invested in the stock exchange, and obviously in the last 2 years, everybody's bragging usually on Saturday night when you go with your friends for a drink or something, and everybody's bragging about their successes. Nobody's bragging about their failures. So in the last couple of years, if you threw a dime on an ETF on the S&P 500, you would make 18% annually. You don't have to be smart. You can be a donkey and still make money. I didn't hear any of my friends telling the horrifying story of what happened in 2022 when the S&P 500 dived by 22% because we do not brag about our failures.
Right.
So I was looking to balance my portfolio and actually generate a financial product that will be stable, will give me some premium over a zero risk product, and will be not correlated to what happens in the stock exchange. So, from an investor's perspective, this is the financial product that we created. Initially, when we started the company, Eric is my co founder, we started with our own money. And it was refreshing for us because everything that we have done before we joined forces in this company, we used other people's money. We had an idea, we went out, raised money, took the company public, raised more money. It's the sweetest money on earth. With this company, we started with our own money, and when we exceeded our capacity to deals, then we reached out to friends and family. We started a small micro fund, and when we didn't have any more friends and family that picked up the phone when we called them, Then we went to friends and family. And at a certain point, we took the majority of the GP for the fund that became our largest forward flow buyer. From an investor's perspective, today we accept only accredited investors. We are
Okay.
a Reg D 506C fund.
And
We
tell
accept
the listeners what accredited means real quick.
accredited means that either you make more than $200,000 a year as an individual, $300,000 if you file jointly, or you have more than $1 million in assets that are not your primary residence. And the assumption is that if you make that much money or you have that much property, you are smart enough not to make bad decisions.
Right.
I don't know who was setting the rules, but this is the law. And in reality, what we do, this is a fund. The fund is administered by a third party. And basically, the fund is invested into a pool of loans. So there is a distribution over a few hundred loans in 10
Wow.
geographies. And a single investor is basically taking a portion of this whole pool based on how much they invested. It's a hands off, it's a total passive investment. In terms of yield, we managed to provide, or historically, obviously, we cannot predict about the future. Historically, we generated on a non levered, fully secured investment. We managed to provide about 8.5 to 9% yield per year. And if you compare apples to apples and pears to pears, because we brag at the bar on Saturday night when we go out and we want to show how good we are. So we have to remember that this investment is not levered, non-volatile. So we distribute quarterly. Um, we have distributions. It's predictable income, and it's not correlated with stock exchange as opposed to real estate investment trusts to REITs that the asset, the base assets might be very stable, but if the market goes down, it will go down because this is the notion of the market. So, and recently we launched our Fund 5. It's our fifth fund. So, and with Fund 5, what we have done is that we wanted to become accessible to as many people as possible that would like to dip their feet or dip their toes into the water and feel the temperature of how it is to invest in our product. So we reduced our minimum investment to $50,000 as opposed to $250,000.
Wow.
Our investors would be mainly high net worth individuals, family offices, some institutionals, and they enjoy a hands-off solution that, if we again compare it to rentals, is has no issues of maintenance, no
Right.
insurance,
Yep.
no
No
property
egg
managers, no
burning on
egg
the
on the
stove.
stove, yeah, and the fire department venting the roof. And so in that essence, this is a product. I would call it and define it as the most sexiest, non-sexy financial product. Because really, and the reason why I define it this way, because this is not something that you will brag about on your Saturday night
Right.
conversations, because obviously it doesn't make a double digit yield and you're not going to conquer anything. But if you want to preserve wealth and you have a big portfolio and you want to balance it, but still don't want to put your money into high yield savings accounts or certificate of deposit or mortgage based securities, and you want to get some kind of premium to beat the inflation and make a little bit of money, but still you want to have something that is less volatile. And in many ways, this is why we used in 20 or 30 years ago, we used to invest in gold or in ETFs that are invested in gold. But guess what? Gold became crazy as well.
Yep.
That became volatile
Hmm.
as well. So if I'm somebody and I'm looking for something that will balance my craziness and my investments and will secure some of my wealth, I think we managed to provide a nice solution here.
I love
Again,
it.
it's not risk free, but the risk is manageable. And so from the investor's perspective, this is basically a benefit of investing in our financial product.
It is the sexiest, non-sexy way to invest. I love that
Yes.
definition there. So I do interview many people who have investment funds. So I'm curious what makes OwnEZ different from these other investment funds.
So I think that I mentioned it, but we're not levered. So if you invest, for instance, and again, I'm not opposing to any other type of investment, but it's different. So I would start with, first of all, the asset class that we are at, which is only owner occupied
I love that. I love that.
loans, which is moderate to start with, because if you lend to investors and the investment goes south, the investor may just walk away from the investor. Somebody who lives in the home, they will have to think twice before they walk away from their own home. Secondly, we are not levered. So the charter of a fund allows us to lever up to very low loan to value. So, but in as a strategy, we have not done it until today. So we managed to provide significant yield without having leverage. And the benefit of it is, if everybody asks me always, what will happen again if there will be a crisis like 2007? And everybody has in mind what happened in Las Vegas. Because in Las Vegas in 2007, the market crashed by 62%, but over 5 years.
Wow.
So we modeled our product as opposed to this scenario. And guess what? Yes, people will not make as much money as they will make, but they will not lose money because we have the flexibility. Once we are not levered, there's no bank that will check the debt service credit ratio and will say, hey guys, you have to bring more capital because the prices came down now. No. Or we have a case, it's one single case that we had a loan, we had to foreclose the property, and guess what? We couldn't sell it for a decent price that will cover for the expenses. But since we are not levered, we just rented it out. So it's not in our business model to rent out properties, but if something goes south, we have the flexibility to fix it because nobody is telling us what to do. And if everything goes bad, and hopefully it will never happen again, but we can go to our investors and say, hey guys, here it is. This is the situation, and this is our recommendation. And we're not levered. We're not under pressure. If you look on the chart of home prices between, let's say, 2002 and 2022, including the dive, if people had the ability to push their water under the waves of the 2000, 2007, 2008 crisis, not only did they survive, they actually made money.
Yep.
The people who sunk were the people that had the weights of financing on their neck, and we're not in that position. And I think being non-correlated to the stock market, so not everybody has a strong belly. You are in the stock exchange. Today you have a war, tomorrow you have something else. The stock market is moving based on predictions. A bunch of analysts think that, I don't know, something is going to happen. And then all of a sudden, people panic. 90% of the market, anyway, is managed by computers today. It's algo trading. So if you want to preserve wealth and make some multi-generational wealth, and you want to have some kind of prediction, you have to balance this. So I'm not claiming that everybody should abandon the stock exchange, because if you want to make money, you have to be there. But I wouldn't put my 100% of my
Nope.
money in one bucket. So we provide like one bucket with free cage, no cage, or no cage, free hens, eggs. So this is what we're doing.
Well, Efri, I think you also left off a really valid reason how OwnEZ is different is that I like the whole karma factor because you are doing so good out there in our country by providing homeownership to people who don't fall into the regular cookie cutter type situation. And I actually really like that about you. And it's really good for your investors to know that you are out there
Sure.
providing home ownership to people who are going to be great homeowners, have the money, but just can't get through some of those obstacles. So I think karma is a very good reason why they should consider OwnEZ as well.
And I want to add to that, one of the major drivers for me to push forward. So one of the first properties that I bought, rentals that I bought, was in Phoenix, in Arizona. And back at the time, at the beginning, I was really hands-on on everything. So every other year, I would fly in and just do a quick round with my property manager of the properties. And in that specific, this was a property that I bought with the lease already. So this family lived in the property for 12 years. They paid on rent mostly as twice as they would pay to buy the home if they had the ability to buy the home. And they were a nice family. I saw the kids growing, going to college. The kids were first generation to get education. The parents were skilled blue collar laborers, hardworking, and I knew that they can't afford making the payments because simply they paid me over the years. They paid the rent, and at a certain point, sitting in their living room, I was blunt enough to ask them, "Okay, guys, why have you never bought a home?" And apparently, they didn't have the score to do it. And I said, why should I care about the score if you manage to pay that amount of rent, which eventually summed up to twice the cost of the house?
Exactly.
I know that you're good. You're good. So, and then when I finished modeling everything, building my Excel spreadsheets, and seeing that the money could work, I was not lazy. I hopped on a flight and I went to some of my tenants and I told them, listen, I will convert you to a loan. I will become your mortgagor. Yeah, we started in Indiana. In Indiana, you can, as an individual, you can give up to 5 mortgages without getting a license on an annual basis if it's not like a business. So I said I don't need to underwrite them because I know that they've been paying for the last 4 years or 5 years. They've been paying rent, and I told them, listen, I will convert you into a loan. I'll sell you the house. You know the house. This is your house. You like it, and you will become a homeowner. And people were appreciative. And then I said, okay, so that drove me actually to provide these people a long-term solution and do it in a broader way.
I love all of that. So thank you for doing that. Before we move to the second part of the podcast here, so what's next for OwnEZ?
So I think that we finished our startup phase and we provided hundreds of families the ability to become homeowners. And now the challenge, like in with any startup company, is the challenge of scaling up. It's not easy. Been there, done that, and it's never easy. So we are looking to expand into more markets, and this is on the origination side. And at the same time, we are looking to increase our or to double our assets under management. As this is why we started our Fund 5. Parts of the benefits of Fund 5 is that it's parallel to our Fund 4. So people that invest the money, they don't have to wait until we make the investment, etc. Their money will work from day one.
Nice.
Will join the current portfolio. The fund is an evergreen fund, meaning that we have a lockup period of 2 years, but afterwards people can redeem their money if they need the money or want the money or they're not happy
Oh,
with
that's good to
the
know. Okay.
yield.
Yep.
So we don't hold people that don't want to be with us. We like people to be happy with us. We have returning investors that started with our Fund 1, invested in Fund 2, 3, and 4, and so on. And so basically, we are open for accredited investors. Everybody's invited to go on our website at www.ownez.com.
And by the way, that's the letters E and
O
the letter
W
Z.
Yeah,
Yes.
OWNEZ.com, and leave us a note, or you can reach out to me directly if you wish. I'm on LinkedIn, and or you can leave your information on the website, and either me or Chad, who is uh, our investor relations manager, will reach out to you. And we'll be more than happy to have you part of the family.
I love that. And it truly does sound like a family because you are doing the amazing things that you do for these people in need. So, again, thank you. But we are going to move to the second part of the podcast, which is what makes Efri a badass. And I use the acronym BADASS. And the first letter is B for book. What's a book that's made a huge difference in your life?
Okay, so that's a funny and an interesting story. So when I was 22, I read the
So, 3
book.
years ago, 22, 3 years ago.
Yeah, of course, four, actually four. So the book that I read was Zen and the Art of Motorcycle Maintenance by Robert Persing. It was
I've
written in the
heard this book.
70s, and it's a very philosophical book that tells the story of life through the eyes of a father and his son that across the United States on a motorcycle on the motorcycles. And the funny thing about it, it changed my mind because it talks about a lot about options, freedom, challenges, and so on. And everything goes through the eyes of how you need to maintain your motorcycle while you travel across the United States. And 3 days ago, I came back from an 11 days trip on my motorcycle crossing Route 66 from Clinton, Oklahoma to Santa Monica, California. And I decided to take the same book with me. And funny thing is that when you are 4 years older than 22, it looked totally different to me. I managed to read it through the seventh chapter. And I realized that when you're 22 and everything is still ahead of you, you have a different vision of on things. I read it again now, I was more criticistic, obviously, and I thought, well, this is so much of BS. Excuse me. But it made a lot of impact on me. Yeah,
Wow. What kind of motorcycle do you have?
it's just a midweight adventure bike, Suzuki.
Gotcha.
I had to get off the grid, so I just rode from Austin to Clinton, Oklahoma, and then all the way west to Santa Monica. It was really good.
What a fun ride. Wow. Very cool. All right. The first A in badass is for advice. What's the best piece of advice you've ever received?
Okay, so when I was an intern, I worked for a big company. I will not disclose their name, not to shame them. And my boss had the tendency of walking in the hallways around 7 p.m. in the evening to see who is still at work working. And then one day, somebody in the company told me, "Listen, don't confuse being busy with being productive, because what
Yep.
happened is that people will be there, do nothing, and then at 7 o'clock when he would pass in the hallway, they will just start to punch on their keyboards. But most of the day, they would just do nothing." So it hit me really hard. I'm trying not to be too much busy, but when I'm working, I'm trying to be productive. And it aligns with my goal in life to have a lot of balance in life. I'm a great supporter of balance in life. My team members, they know that. I am not big fond of business communications over the weekends. I am a big advocate for people to actually to take their vacation days rather than accumulate them, because I
Yes.
think that it's crucial. You have to have balance in life.
Absolutely. I can remember just being so nervous to even ask to take a vacation. And I'm like, what am I doing? I worked for those vacation days. So, yes, I agree.
Sure.
Thank goodness we don't have these JOBs still. All right. The D in badass is for drive. What drives you to be successful?
So I think honestly, it's about options. I think that starting from the beginning, I wanted to have options for me, options for my family, options for me to make my own decisions. I guess that I as a teenager I was a little bit rebellious, as most teenagers, but I had a notch probably higher.
I was an
And
angel, by the way. I never did
okay,
anything wrong as a teen. I'm just kidding.
amazing. My second daughter was an angel, but my first taught us how it is to be a teenager. She's awesome. She's 30 years old now, and she's really awesome. But and anyway, now looking backwards, I think that I we were fighting with her over stupid things. But anyways, I think that what drives me to be successful is, and the definition of successful in my eyes, it's not the number of the amount of money you have in the bank. It's about having options. If you want to go and hop on your bike for 11 days, you have the ability to do so. And people combine in their vision, they want to have that money to go to this crazy spa hotel, blah, 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 all of it. No, freedom is being able to sit on a rock next to a creek in the middle of the day and read two chapters in a book. This is freedom for me. Uh, and so this what is driving me to be successful.
I love it. All right. The second A in badass is for aspiration. I'm a big goal setter. So, what is a goal you are currently working on? Can be personal, can be business.
Sure. So I can disclose both. on the personal level, I think that I don't have running operations is not my forte. Okay, so I think that there are people that can do it better than me, and my goal on a personal basis is to give this part of the business to somebody else and be in a position that I could stick only to entrepreneurship and visioning
Nice.
and coming with the new ideas. On the business side of business, our aspiration is so we want to, in the next 24 to 30 months, to multiply our assets under management. So this is the target.
Nice. I like that. All right. The first S in badass is for systems. What systems do you have in place to help you achieve success?
So we started with fintech, and we will end, I guess, with fintech from the beginning. So at the beginning of my career, I was working for the tax authorities. Don't tell anybody, though. It's a secret because people don't like the taxman.
Nobody's going to listen to this. Go ahead.
And when I started working for the tax authorities back at the time, people were using still calculating machines and with the ribbon, and they were doing a lot of work in a very inefficient way. And me graduating school, being very arrogant, thinking that I know everything, I wrote a spreadsheet. It was before there was Excel. I don't know if people would remember Lotus 1 2 3 and yeah, so
Yep.
and Quattro Pro. So I brought a spreadsheet. I brought a word processor, and basically I developed a methodology to audit books of companies using computerized tools.
Wow.
Moving in my career later, I stuck to find ways to make things more efficient by using technology. On a personal basis, I'm part of my systems is that I tend to block slots in my calendar just to provide myself time to do tasks that I don't want to be interrupted when I do these tasks. So since my calendar is open for the company, and we in our company we have like a matrix way of communication, so everybody can talk with everybody. Somebody has an idea, they want to share it with me. It will not be a break of the chain of command per se if they just call me directly. So since it's open for everybody, then when I don't want to be interrupted because I need to finish something or to be focused, I will just block a slot on my calendar, and then I know that I will not be disturbed, and it works pretty well for me.
Very good. Yeah, I have to block like 4 to 5 a.m. just so I know no one's going to bother me. So
Lovely.
I am one of those who is addicted to my phone. And like I just got a Venmo request from one of my cleaning teams. And I'm like, as soon as exactly. So I am, that's a good one I should put into one of my systems. But anyway, this has been such a great conversation. And the final S is for success. And I think you already hit on this one, but what does success mean to you?
So I don't want to sound a hypocrite. Okay. So in reality, I think that for me, success is to be in a position that I can build something that creates value for others,
Mm,
but at the same time is giving me value as well. And as I mentioned before, for me, value is giving me the freedom to live my life on my own terms. So we want to do some good. I want to do some good, but at the same time, I want this good to be good for me as well.
Well, I agree. I think you're doing such great things in this real estate industry. People aren't always doing that. So, and they are so rigid with their rules. So, I really, truly love what you and your company are doing. So, one more time, how do they find you? And make sure you spell out the website.
So it's www.ownez.com.
.com. Well, Efri, this has been such a great time, and I really, truly appreciate you being here with us today. Thank you so much.
Thank you, Jen. I enjoyed being here.
Absolutely. Well, that is all. And thank you for listening. We will catch you on the next episode. Now go out there and share your badassery. And don't forget, make it a great day. Take care. Bye-bye. Whoop, whoop.
Thank you for listening to RAIN, the Real Estate Investor Growth Network. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. If you need more badassery, you can follow Jen Josie by visiting therealjenjosie.com or become a member of RAIN by registering on rainmastermind.com.